Boy, that time flies when you're having fun. It's about that time of day again here, folks. It's Wednesday evening. It is March the 6th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders earn consistent, reliable, dependable, predictable profits using a simple three-step trading strategy that we execute together every morning in our trade room. But my plan tonight is to identify the best opportunities setting up for tomorrow, that's Thursday's trading session. And we're going to grab crude oil, S&P, Nasdaq, gold, and euro in tonight's video. I'm going to jump in here first over on the oil market. We, of course, have survived that weekly inventory report. And you can see right now we got a bear market into a trading range here on the oil. Market is bearish, right, into a range-bound market here in today's trading session. So trading ranges, right? We've seen a lot of these ranges lately. Ranges tell me to buy low, sell high, avoid the middle, fade the breakouts, basically. This is a bear bias going into that trading range. But I'll tell you right now, though, there's one really, really big clue on this chart, and that is this really strong bull break higher. Now, of course, if you watch this newsletter every evening, you know what I'm going to say right now. Anytime we see a strong leg in one direction, we usually see a follow-up leg. So I've got myself set for some sights up here around that measured move, around that 56.70 area. And ultimately right now, I'm looking for a couple different buying opportunities. If I can get the right setup, I'll look to buy just before we get there. Right, what I'd really like to do, though, is get back down below that range and buy below that range. I'm going to put together a couple different scenarios on the oil here as we dig in here on oil tonight. Over on the S&P is bearish into its own little variation of a trading range. Bear market tells me sell at resistance. Trading range tells me buy low, sell high, avoid the middle. But I think the most important clue we're seeing on this chart has nothing to do with the actual range or the trend. It has everything to do with where we are right now. If you recall, right, here, of course, this is Wednesday, Tuesday, right? Remember back on Monday when that market nosedive lower, right? Yeah, that big nosedive, that is a retest of that low. And of course, that 2768 area is a major, major milestone for these sellers. So that's going to be on the radar for tomorrow. We definitely have to be careful trying to sell as this market goes lower, which means got to stay away from those traps, right? Traps, of course, are waiting down here. I've got some patterns I'm looking for a buy going off of that battle zone, off the low. Got to make sure we're patient on that long because obviously it's a bear market right now. What I'd really like to do is get up and sell this thing back down. I'm also going to keep an eye on a possible reversal here because who knows, right? This could turn into one monster trading range, right? This could easily rally back up. I'm going to put that plan together here on the S&P in just a few moments as well. Now, keep that in the back of your pocket though, right? Look at how close the S&P is right now to that major market objective. Hold on to that thought, and then let's go over here to the Nasdaq right now. Nasdaq looks very similar, right? Bear market into a trading range. Bear market says sell high, right? Sell at resistance. Trading range says buy low, sell high, avoid the middle. But wait. Where are we though? Where are we in this Nasdaq? Oh, wow. There's a lot more space to go on the NQ right now, right? This is the same situation as the S&P, but wait a second. No, there's a lot more space to go in the Nasdaq. So that opens the door up for more sellers here on this Nasdaq. So I'm definitely looking for some short opportunities here. But because we're coming in below that range, I have to look for a very precise entry on that. And I've got to make sure I time the entry properly according to momentum in the market. Obviously, I'd love to be able to sell high on this, right? We may not get the shot here on the Nasdaq. I've got a couple key levels here, one being that hidden channel, and we'll put together some plans here as far as what the best patterns are going to be, right, for getting in and, of course, maximizing our profit here on that Nasdaq. We'll jump into the Nasdaq in a moment. Over here on the gold, I know. We're still here, still inside this trading range here on gold right now. It is now going to day number 3 now, basically inside that same range. Now, in my experience, that number 3 is pretty powerful. Usually 3 legs to a big move, right? 3 days before a gap gets filled, 3 days inside of a range. There's no guarantees for this, but, we may be in store here for a breakout tomorrow because, again, you can see here, right, Monday starts off inside the range, right? Tuesday, of course, right, ends up back into that range. And, of course, we're slopping around there in Wednesday. It's a trading range environment. We're going to buy low. We're going to sell high, right? Buy low, sell high. Want to get it down to buy low. Want to get it up to sell high. But like I said, I'm also keeping my eyes open on what a breakout will look like. And so, of course, we'll talk about what qualifies a breakout here in just a moment on that. And then over here on the euro, of course, also has a range-bound market right now, bear bias to it. We're sitting down around that 13,000 big round number. The 13,000 big round number is a major milestone. If you've been watching the euro as closely as we have here in this nightly newsletter, you know the euro has really loved to go from the big round numbers, right? The 13,000, 14,000, 15, right? 12,000, things like that. So we might be here for a few days around this big round number. That's fine by me. Bear bias says sell high, right? Trading range, of course, says sell above the range. And I've got this hidden channel on here I'm waiting for right now to see if we can't incorporate maybe a two-try failure right off that high. We'll talk all about the buy and the sell side here on that euro. And boy, oh boy, we're going to put this whole plan together here for you guys in just a few shakes here this afternoon. Before we jump in, though, the charts here for tonight, I want to make sure you never miss another great video. And to do that, all I need you to do is join the mailing list. You know me, I'm never going to waste your time with spam or selling your information. All I want to do is make sure you get the good stuff in your inbox when it's ready every afternoon. All I need is your name, your email address, and then hit that subscribe now button. And then remember, your job is not done once you subscribe to the list. Make sure you check your inbox because I'm going to send you a welcome email with a bunch of goodies to give you the best experience right with this nightly newsletter. So head over here to the blog at sidewaysmarkets.com. I'll put all the links in the description of the YouTube video here tonight. And also don't forget tomorrow we'll be in our trade room tomorrow morning at 8 o'clock Eastern time. If you cannot be with me tomorrow because you're not a client of ours here at School of Trade, I'd love to see you there tomorrow with us. If you can't be there with me, the next best thing you can do is grab all the charts that I'll be using in tomorrow morning's trading session. They're posted right below the video tonight, right here on our blog. Just scroll on down and use those charts right on your own computer, right, for tomorrow. And again, don't forget, guys, I'll be in the trade room tomorrow morning, 8 o'clock. I'd love to have you there with me. Now, how about questions, comments, concerns, any feedback, any other ideas you want me to cover on this nightly newsletter? That's what the comment section is for. If you have any questions about anything about this trading strategy, make sure you drop those questions in the comment section below. And when you do so, right, give me a thumbs up if you liked the video so far tonight. And don't forget to subscribe to our YouTube channel and hit that notification bell so you always get notified whenever I publish something new. And then, of course, don't forget, if you like the telephone, right, or maybe you don't, you want to call that, right, use that live support tool. I'm always here. I'm old school. I'm definitely old school. I still talk on my telephone. I'm not quite a texter yet, right? So call me anytime you want on that toll-free phone number. That'll hit me on the hip, and I'm always there to answer all of your questions. If you don't have a telephone, grab that live support tool in the upper right-hand corner. All right, we are looking good. It's time to get to work here. Tomorrow's Thursday, March the 7th. Let's see what we have here on the schedule tomorrow. Now, of course, I've been keeping a cheat sheet here with you guys all week. A lot of news was coming out this week, so I wanted to make sure we kept it all organized here for you. Tomorrow, the two big events tomorrow. One is the ECB announcement at 7:45 Eastern time. When I think ECB, I think euro, obviously maybe the cable if you're a Forex trader. I think gold, right? I think dollar, anything about the ECB announcement. ECB announcement's just like the FOMC announcement. In my experience, it can be pretty nasty trading euro and gold those few minutes after. So 8 o'clock to maybe say 9 o'clock, 9:30. So be very careful on that euro. Be very careful on the gold tomorrow, right, as we go into, I would say, 7:30 to 9:30. What I usually find is on the ECB days, and these don't happen every month, right, but every few months we hear from the ECB announcement, so we do for the FOMC announcement in the U.S., wait till after 9:30. Give it some time to breathe after that ECB announcement, because it's not just the announcement. Then you got Mario Draghi. He hits the stage, and of course he gets peppered with, off the cuff questions. And so it's going to be about 9:15, 9:30 before those markets really calm down. So I tend to wait a little bit on those Thursday mornings when we get the ECB announcement. I tend to wait a little bit on those on euro and gold. That would be my best advice for you for tomorrow. And then as you may recall, we are watching closely here right now that Emini contract rollover. You probably saw all the pop-ups. You probably got the email from your broker sometime today. As I'm recording this video right now, and of course it's Wednesday about 4:45 Eastern time right now, it's quite clear that the S&P is definitely still on that 319 contract. Now that may change tomorrow once the 619 contract of any of the E-minis, right? S&P, Nasdaq, right? And the Dow. Remember, the Russell's no longer an E-mini anymore. That's on the ICE exchange in London. The bottom line, though, is that once that 619 contract has more volume, well then, poof, right? We'll move it over to the 619 contract. So once that 319 contract has less volume than the 619 contract, then we start trading that 619 contract. Remember, contract rollover is not contract expiration. So don't stress out about it. Right? If you pick the wrong one tomorrow, it's fine. We are on the 319 contracts right now on the E-minis. All right, guys? So that's the plan here for tomorrow. That's the schedule for tomorrow. I don't expect this jobless claims report to be a very big market mover. Right now, really the big news we're seeing right now these days is around 10 o'clock Eastern time. We continue here to see some relatively sluggishness early in the session. With tomorrow being the ECB announcement, my normal plan is to go trade gold and euro early in the morning. But probably tomorrow, though, we'll have to wait on that. We've seen a lot of the action, though, happening 10 o'clock to 11 o'clock. So keep your eyes open, but be aware, right? These the best moves we're seeing right now are happening later in the morning right now. Remember, the markets are seasonal, right? Sometimes the moves happen early, sometimes they happen late. And what I always tell my clients is don't ever assume that whatever you're seeing today is going to keep happening. This is one of the benefits of working with someone who has a decade and a half of experience. I've seen all the different cycles. I've seen the good stuff, the bad stuff, and what I know about the markets is that once you kind of get comfortable with it, it's going to change on you. It's job security. It really is, right? We kind of embrace that in our trade room. We embrace the fact that every day is a little bit different. If we're seeing the big moves of the session at 10 o'clock right now, 30 days from now it could be 8:30. A year ago you couldn't get anything moving after 10 o'clock. So it really all depends on, right? It all depends on what's happening right now. So bottom line is we are seeing the best setups happen at 10 o'clock right now. But, again, don't hold your breath on that because just when you start picking up on those tendencies, the market loves to change on you. All right, let's jump right in. We got some charts to work on here tonight. We got crude oil, S&P, Nasdaq, gold, and euro. Starting off here first, opening up the oil market. We survived the inventory report. First question is, what are the market conditions that we're dealing with right now? Pretty simple here. We got a range-bound market, right? Does that range-bound market have a bias to it? It does. There is a bear bias to it. Now, what does a bear bias tell me? It tells me to sell the high of that range. You can see those sellers definitely came in to sell off that high earlier. Buyers even buying off that low earlier, right, as well. The bottom line, though, is a range-bound market tells me to buy low, sell high, avoid the middle, and fade the breakouts using a very specific entry pattern, which we call the two-try failure, which is a good example right here. One try, two try, buying back, right back up. Now, with that said, there is an overall bear bias to it, but you can see one very big clue on this, and that is this recent very strong move. Now, in my trade room, we use a set of rules, right? A checklist, to be honest with you. I use a checklist in my trade room every morning. And one of the things we do in that checklist is we always look for those big, strong moves. Because it's easy to forget that anytime we see a real strong move in one direction, we typically are going to see another leg. And that second leg typically is a symmetrical second leg. So that gives us an idea of direction right now. It also gives an idea of location of where we want to get our exits. Now the only concern I have is I'm trying to be a buyer up around the high of this range. So to do that, to be a buyer up here, I've really got to be careful. I've got to look for really a very specific type of pattern. In fact, I think there are two types of entries I'm looking for. One is going to be up here, and the other will be down below the range, right? That would obviously be where the best trades will come from. So first of all, as we go higher, because I do think we're going to see the market finish off this leg here, right? What would be a buy to finish off that round going higher? What would it look like? Well, I'm going to use the buyer's momentum going with the bull momentum. I anticipate, because the market's a range and because there's a bear bias to that range, I'm expecting to see sellers try to sell this market back down again. We also have that rising support trend line, though, which obviously is going to be a little bit of a buzz killer here, right, for those sellers. So I'm expecting there to be sellers to try to sell this. I'm also expecting those buyers here to be holding this momentum. So how do I anticipate the sellers getting in so I can then buy into their failure, right? I've got the momentum on my side. I'm anticipating bears are going to try. How many times do you think these bears will give it a try here before they give up? Probably once, probably twice, and then I can start looking for a buy. That's my plan. My plan now is, if we keep going higher, I've already got the first try. I want to see a higher high here, right, followed by a second try, and look for that nice strong signal to buy off that trend line. This is a relatively aggressive trade, right? So make sure you get that higher high and make sure you're really buying off support. What you don't want to do in this trade is you don't want to do something like that, right? It gives you a shallow pullback. Because oftentimes those shallow pullbacks, nobody wants to buy up there. It'll come right back, trap low, and up from there. So really make sure you're using that trend line, right? It's right where those sellers are going to get in trouble. That's where I want to be buying. So that's going to be that's the aggressive one. Now, what I love to see is if we can run back down to those lows. If I can get back down to those lows, now, of course, I can buy those lows. If we can drop down off those lows, there's a couple different patterns that we should be looking for. One of which, of course, is exactly what we saw here, right? We see the move lower, the bears try to sell off the moving average, and of course, we buy into their stops. Now, I call this a two-try failure pattern. Looking for the strong move down. That will bring the moving average over. The sellers, of course, will try to sell off the moving average. It's a range, so you shouldn't be selling, right, you shouldn't be selling the low of this range. We then, of course, want to buy now into their failure. It's called a two-try failure pattern. 1, 2, back up. 1, 2, back up. So that's a great looking pattern we can look for tomorrow. Another pattern I'm watching for here right now would be what we call a two-legged pullback. So imagine now we go lower one leg, two legs lower. Now draw a trend line over the top. I now can use that trend line along with our failure setup as a way to buy off that trend line. Again, once, twice, buying back up. We call those two-legged pullbacks. So ranges are pretty simple. I've got a very strong bull momentum. I'm expecting the very least to get pushing towards that measured move. I'm looking for a 1, looking for a 2, and a buy from there. If we go down, look for that same two-try failure. 1 try, 2 try, and back up in. So those are two examples right there of how I use those 2 tries. One going with momentum and one picking that bottom. Want to learn more? Hope you do. I have a lot I'd love to share with you. In fact, I'd love to teach you all about the same strategy that we use every morning in our trade room. So if you want to learn my strategy, if you want to learn all my favorite setups, and learn a couple of my best kept tricks about finding channels and ranges, grab that free trading class in the upper right-hand corner. I'll also put a big red button right below the video tonight on our trading blog. So grab the class, either it's linked up below the video or in the upper right-hand corner. Learn my favorite patterns and see hundreds of examples of those patterns directly from our trade room. Let's keep going. Now that you know the plan there on the oil, right, now let's grab a look at the S&P. So the S&P, we talked about this earlier. The S&P, of course, is bearish into a trading range. It's quite easy to see we are 1, 2, 3 legs down. Now, we talked about this last night on the euro, and I talked briefly about it earlier in this video. What's up with number 3? The number 3 is a very, very powerful number in the financial markets. Usually 3 legs lower or higher, for that matter, results in a trading range. We saw an example of that on the euro. So I have my trading range, and we're probably at a point of support here right now, right? Because those 3 legs down. Bear market says sell at resistance. Trading range says sell above the level of the range, right? That's what a range tells me to do. But more importantly, though, I want to take a look left because like I said earlier on in the introduction, right, it's very, very obvious here right now that we are only a couple points away from retesting that major objective. So this basically tells me that being a seller below the range really isn't going to be a very valid option for me right now. Being a seller below that range, probably not going to be a good idea. That also gives me a chance, though, to catch those sellers trying to sell it and be a buyer on this. So I think there's a definite potential here right now to play both sides of this market, right? I'm sure there are a lot of folks here who are going to look at this bear market and they're going to think, hey, sell breakouts. They'll try to sell it as it goes lower. And let's be honest, right? For all I know, it could keep going lower. But the odds are not very good if I'm selling right into a major, right, a major level of support. The odds aren't very good if I got that major level of support right there. So let's put that plan together, right? How could I buy this market? And more importantly, right, how could I sell this market? Well, remember, anytime I have a trading range, I always like to use that 2-try rule. So first of all, if we keep going lower, let's get rid of this channel here because that channel honestly is not that big of a deal right now. And by the way, whenever you see a range-bound market, it's really the channels are not as important as the range. The range is the king when you see a range-bound market, right? Trend lines are good, but those range highs and range lows, those are the most important features here. Right now, you might look at this and say, well, wait a second, Joe, I think that's the range right there. That's fine by me, right? You may have a different variation of that range. But in my book, we came down, up, down, right there. That was the original trading range right there. Then we went lower, went a 1, 2 back up, 1, 2 back down, right? So that's the range. So with that range now, right, as we go lower here, again, I'm anticipating these sellers are going to get a little bit too far in over their heads down here. And of course, because the market's bearish, I'm not going to just buy it. That wouldn't be a very reliable strategy, would it? Right? That doesn't work very well, right? If you try to buy every time the market goes lower, you're not going to make much money in a bear market. What's much better, much more reliable, I should say, right, is to get this market down, let those sellers try once, let them try a second time. Because you got to remember, right, the sellers aren't going to give up after the first try, right? After that first try, the bear's going to go, oh, okay, well, let's see if we'll sell here. And they'll sell at a higher price, right? Most people are probably not going to give up after one try. Most human beings are going to try twice. In fact, kind of the secret of success in this world we live in is if at the first you don't succeed, don't just try again, but try again, and again, right? It's amazing how the world works, isn't it? Most people just give up after 2 tries. And that's the way the markets work too. After the markets take 2 attempts to go lower, they'll likely give up and the market will rally back higher again. So that's my plan. I want to get those buyers right. I want to give those buyers a chance to buy this. But first, I'm going to have to see a move lower. Then watch those bears trying once, watch them trying twice, and then we can get that rally then going back up right into that trading range. Right? Something else I'm watching here as well, drawing a trend line down here, right? That trend line coming down. Strong move here. Once, twice, up we go from there. So I'm definitely watching these different scenarios right now to be a buyer going back in. But again, don't confuse this. I'm not predicting a reversal right now. I'm saying that as we go lower, the odds of those sellers getting into trouble are pretty high. Right? We may push right through it. And if we do, what would be a good sign or some sort of proof this market breaks free of this area? I call it a 1, 2, 3 breakout. 1 is a strong move down. 2 is a pullback to the moving average. Very important. And 3 is a strong move off the moving average. If I can see a strong move through the moving average here or off that moving average through that low at 27.67.5, then I can be more confident with this move lower. Then I'll draw that new channel. I'll mark up that low, mark up that high, and now I know where my sweet spot is. And I'm going to sell right up above those highs. Okay, I'm going to sell up around the high of that channel. So again, wait for that 1, 2, 3. Be very careful trying to sell a pullback here at those lows because again, you know where we are. Now, that's the buy side. What if the market jumps higher? Couple different things you want to look for. Obviously, I want to go up into a level of resistance, let those buyers try twice, and then sell it back down. There are a couple different variations of this that you want to be aware of. For example, maybe it's a 1 2-legged pullback. If we do get that 1 2-legged pullback, I can now use that trend line as that level of resistance on the opposite side. I'm always watching for those trend lines. They make for great, great entries. Another option would be, let's say we really push, right? Let's say this thing really takes off to the upside. Very, very strong move. Okay, how do I sell that? Well, momentum at that point will be so strong, you won't be able to sell it easily. Let's put it that way. Let the buyers try once. Let the buyers try twice. It's the same idea we had of buying off that low because that momentum will be bullish at that point. Let them try once. If they don't succeed to keep it going there, they'll probably try one more time. If they fail that second time, strong signal candle, and we're dumping it back down into that trading range. I'm looking to buy with that pattern, looking to sell with that pattern, and again, looking to avoid the middle of that range. Now, guys, what would it look like if this market turned bullish? Well, we talked about the 1, 2, 3 breakout or breakdown. That's pretty much the same thing we'll look for here for the buyers. 1, 2, 3. If I can see a strong move up and I see that pull back to the moving average and I see it blast off that moving average, range or no range, we're bullish now. And at that point, I'm going to mark up that high. I'm going to mark up the high, bring it down to that low. You got it, right? And we're looking to buy the pullback from there. All right, guys? Easy, easy pattern, but we got to get that 1, 2, 3 reversal. And then last but not least here, don't forget, if we sit inside the range, don't forget, stay patient. 1 try, 2 try, back down. 1 try, 2 try, back up. So if we sit inside the range, we need to sit on hands. Let's keep going. From the S&P now over the Nasdaq. Now the Nasdaq is going to build on everything we've talked about so far. What do you know so far about the Nasdaq? Bear momentum. Unlike the oil market, we don't have any strong push higher here, right? So there's no clue right now this market may be going higher. Okay, all we know right now is we're bearish. We can also see a basically triple bottom here. 1, 2, 3. Double top. What does that give me? Gives me a range. Okay, we're not making lower lows and lower highs anymore. We're making lower highs, but we're seeing no more lower lows. That creates a bit of a floor, right, to this price action. Okay, that basically tells me that sellers, right, are rejecting this market going lower. Now again, it might go lower. We're going to plan for that as well. But the most important thing right now, though, is I've got to really wait for proof before I start selling any of this stuff. So I'm looking for a move, right, either going through that range, or what I'd like to do is get us up and use this hidden channel as my key level of resistance. It's a range-bound market. I want to sell. I want to sell up above the high of the range. So find a level of resistance to use above the high of that range. Take the trading range, copy and paste it up. That gives me a level of resistance. Take those lows, copy and paste that up. That creates levels of resistance. So this whole area up here is a great spot looking for an entry pattern. Okay, that will be the easy way to do it. Now, let's look left here. Unlike the S&P market, the Nasdaq has plenty of space to go. In fact, you'll notice if I take that trading range, copy and paste it once and twice, that puts me right at that 70, 74 half area. That's a pretty good spot there for a good target for those sellers. The problem, though, is right now we have very little proof that these bears actually have the confidence to go lower here. I don't see other clues here as far as it being a range bottom here on this. So all I know is we're in a range right now, but we have enough space here to get short for a little more profit as we go lower. So I want to look for a chance to sell down here, but I also want to look for a chance to buy it as well, because let's not forget it's a range-bound market. So how do we play this, right? First of all, let's talk about the sell side, right? How would I sell this market right now? There are ultimately two spots to be a seller. One is above the range and two is below the range. Let's talk about first going above the range, right? If we do get that pop higher here, I want to look for that strong move up. Let those buyers now try to buy the pullback, right? Let them try twice, and then we'll sell into that failure. Now remember, if you have enough room for it, we can get that strong move through, right? That's going to be your sell signal, right? Going back down in. Then I can use the pullback pattern for a secondary entry or to add to my position, right? A great way to pad your account or pad your position is to sell half your position off, right, at that high, add more to it once you see that pullback, right? So great way to stack your orders or load the boat, right, on the move, going back down to retest those lows. I talk a lot about adding to positions every morning, right, in our trade room. So that's an easy 1-2 punch, right? Literally, it's a 1-2 punch right back down in, right? So what we're looking for is that 2-try rule combined with that breakout pullback. Now remember that also too could be a 2-legged pullback, right? A 1-leg, a 2-leg, up and over and down from there. And don't forget, that could easily be a culmination of all those setups, right? 2-legged pullback into a failure, right? That failure into a breakout pullback as we go, right? It's a 2-legged pullback into a failure pattern into a breakout pullback pattern. And again, guys, I'm just illustrating what I'm looking for tomorrow. If you want to see real examples directly from our trade room, right, grab that free course in the upper right-hand corner or grab that big red button below the video tonight on the blog, right? You will not be disappointed, that's for sure. Now, that's the relatively easy part. How do we sell as the market goes lower? Well, if you recall, going back to oil, right, we had that oil market. I talked about buying that high. Same basic pattern. Let's say now we go strong move lower, right? That really is the key. In order for me to have the confidence to take this trade short, I'm going to have to see a relatively strong move lower. Now from there, this is where it's all in the technique. I want to see that strong move down. I want to see buyers now, right? I want to see buyers trying to come in and buy back up. Okay, so how many times do you think those buyers will try? They'll probably try once. If they're unsuccessful there, they'll probably try again. Now, if they're not, that's when I can sell back down. Now, look how I'm drawing this here. First of all, 1 try, 2 try, lower lows. Very, very important. Those are lower lows on those 2 tries. And then notice what else? Trap high. The trap really is the cherry on top. Because what's going to happen is, as the market goes lower, the buyer is going to try to buy it back into that range, right? It's a range. You want to buy low, sell high. The problem is it's a bear range. So buying low, you just don't want to be that aggressive with it. We'll talk about being a buyer here in a second. Okay, so I want to see those buyers try once. Okay, they're not going to give up on this if they try once. They're probably going to try again. Now, once they get that second try here now, I want to get those breakout buyers involved, right? Because that's where the breakouts will be. The breakouts will be right above that high, right? See, a lot of traders, they read those old school trading books. And a lot of trading books are written for stocks. And breakouts work well with stocks because they're illiquid. You know, a lot of stocks are illiquid. Obviously, there are the big blue chip stocks, but people don't day trade those, right? So a lot of the old school trading books are written for the stock market. A lot of the books today are written for the stock market. And the stock market, those illiquid, $5 stocks, right? Yeah, you can trade breakouts. But if you're trading futures, and there's so many reasons why I love futures more than stocks, right? I won't go into details right now. But a lot of people, though, right, are trying to buy that breakout. They're going to buy that breakout. And believe me, guys, I'm not saying it won't be successful. I'm saying the odds of that success are not very high. So do you want to be on the low side of it or you want to be the high side of it? The low side is to be a buyer off that second try, right? The high side of it now is to be a trap seller. Right? Look for that trap high. Again, 1 try, 2 try, and run lower. Where's the target from there? The target is down at that 70, 75. All right, guys? Now, we talked about the sell side here now. How about the buy side? right? What would the buy side look like? Well, what if price goes higher? Well, let's go lower first since we're already down there, right? What if we go lower? How could I be a buyer right now? Well, let's think about it this way. If we see a strong move down, the sellers are going to try to sell the pullback. See, I always talk about my secret weapon when it comes to trading, and that is vitamin E for empathy. Empathy might be the most important skill you can learn, and you can actually learn empathy. You really can. If you really work hard at it and start paying attention to your surroundings. I know. Maybe put the cell phone down, right? Get off the cell phone for a little while and actually look around you and study the people around you. You'll be amazed how much you can learn from just sitting and watching on a sidewalk somewhere in, downtown, wherever you're from, right? Watching people and observing people. When you get into the habit of observing people, you begin to realize that, wow, people are really all wrapped up in their own stuff, right? They are. And a lot of times when they're wrapped up in their own stuff, they don't see, they don't see the forest. They see the trees. And so we expect now, as that market goes lower, I would expect you're going to see some sellers who are wrapped up in their own stuff, and they're not going to know the big picture here right now. They're not going to know they're in a range. Now, again, I'm hoping we get that next leg lower. But if we don't get that lower low to try back in, right, what I'm looking for that one try, two try, and then back in from there. Think about it this way. The sellers are going to try to sell that pullback. Now, how many times do you think those sellers are going to try before they give up? Probably twice, right? They'll try once. If that doesn't work, will they try a lower price? No. They'll try a higher price. They'll try again. So if we can't get them to work on the first one, most sellers in a bear market are not going to give up, right? Like this one back here, strong move down, one try, two try, right? One try, two try. Okay, this happens all the time. Two tries are very, very common in all the markets, right? Because they're human beings. Now, one try, two try, that usually gives us a rising support trend line. That rising support trend line is pretty easy, right, to give you confidence now for the buy. Now all we need is a nice signal candle, and we're buying back up from there. So as you can see, I'm using a lot of these two-try failures, a lot of these two-try rules because they're ranges, right? Anytime I see a range, I always know, let them get below it and then buy it back up. But because the momentum is so strong, right, I don't want to just buy it. I want to wait for those bears. Try once, nope. Try again, nope. Shoot, rising support, bingo, right back into that range now. Okay, that's the easy way to sell. Maybe not easy, right, but that's the most reliable way to sell it or to buy it. Now, what about if we go higher here? So what's the plan if we go higher? Well, we talked about this earlier on the crude oil. Remember oil? Oil had that really big blast higher, right? So that's what you want to see. In order for me to feel confident to be a buyer on this, I've got to see a real big blast higher. So here's a couple scenarios you want to think about, right? First, it all starts with a big blast higher. That big blast higher is so strong, right? Shallow pullbacks. It's the momentum now is bullish. Okay, and this might happen easily here. Now from there are two scenarios I'm watching for, right? One is going to be a pullback followed by a 1-2 failure. 1-2 failure. So again, first leg higher here, right? First leg higher here is the blitz. It gets the momentum going. Okay, I can't trust the pullback. A lot of times those pullbacks will fail and drop back in. Right? What I'll do is let the bears try once to sell it, let them try twice to sell it, bingo, right up into their stops, right? All those stops are sitting right above those highs, big bullseye, easy bullseye at that point, okay? Now, another scenario to keep in mind would be we run. Now, we don't get the deep pullback. We get the 1, we get the 2. Let the bears try once, let the bears try twice, and we're buying from there. If you really want to get the sweet spot is a trap low. This is the bread and butter, right? Those types of trades are almost a guaranteed winner right there. Bears try once, bears try twice. Again, all the rookies, right, are trading like stocks. They're trying to sell that breakdown. Doesn't work very well in a bull market or the futures markets. Easy buy from there. Now, boy, if we can get this market bullish here, there's a great potential profit up here all the way back to that 71.82, all the way back up to where we basically started the session off today. Now, will we turn bullish? Maybe, maybe not. All we care about right now is finding those patterns. So Nasdaq's pretty good. Let's keep going. How about some gold right now? Gold's a range. Now remember, gold and euro are looking into that ECB announcement tomorrow, right? They're staring down the barrel of the Draghi rifle right now. And of course, we got to be careful on the gold, right, and the euro. Now, this is the same range we've had from earlier this week, right? Like I said earlier on. Really, at this point, momentum isn't very strong. You can see we got a nice strong move down. They got their second leg. Anytime you see those strong moves, you're going to probably get a second leg to it, right? Strong move down, second leg. I'm not too impressed right now. There's not a lot on this chart that we can use to really give us any clue as far as momentum goes, right? The one thing we do have is the potential for a pendulum swing. But you'll notice it came pretty close there. So I'm just really not getting any clues to tell me, I'm waiting for this or I'm waiting for that. I'll get some clues in the euro in a second. So really at this point, it's really all about that two-try rule. And there are two basic variations of that two-try rule. And again, I cover all of these patterns inside that free course in the upper right-hand corner or that big red button below the video tonight on the blog here. So what are some patterns to look for here tomorrow? Well, it really all depends on the type of move that we see. So, for example, if we see your typical, move lower, I'm going to look for your typical one try, two try, failure into breakout, pull back from there, right? Let those bears try once, let them try twice off the moving average, right? Buy into their stop losses. Then add to your position the next move going higher. Take your profit off at the top of that range and leave the runner for the pendulum swing. Now, that will change, though, if it really blasts lower, right? If we really make a run lower, right? You know what I mean. Real strong move down. If we see that strong move lower, that momentum is going to be a little bit too much. Just start buying it. So now I expect anytime I see a strong move like that, what do we expect? Really one of two scenarios. Either a 1-2 back up, like we talked about on the Nasdaq, right? Support trend line there, buy off that second leg failure. Or what is very, very common is if we see a strong move down, if we really get that strong move lower, what's very common is it'll go up, come right back down, and then that creates the 1-2, and now we look for the rally going back up. Okay, so if you don't see that good entry going long, just wait for this 1 to 2, and then what I like to do is, on a much faster time frame, I'll look for the 1, the 2, and in from there, right? Buying off that, almost like an inside, right? A second entry, right? A second try inside of, right? The major second try. Again, it's all because that big momentum pushed down. And I realize this can be confusing at first, which is why I give you guys access to that free course. Because that free course will give you a whole lot more information about how we use that two-try rule in our trade every morning. Now, how about the upside here? The buy side's pretty much the same, right? Up 1, 2, sell back down, same basic patterns, right? We go up, we pull back to the moving average, right? Buyers try to buy it, we sell into their failure, add to the position with a pullback. Okay, or maybe it runs, right? Nice big run here. What do? 1, 2, back down in. That momentum is too strong. So let the buyers try once to buy the pullback. Let the buyers try twice to buy the pullback. Once they try twice, whoop, sell it right back down into that trading range. Or, like I mentioned earlier, we may see a strong move up, right? That produces a second leg. Once we see that second leg, this is just a glorified two-try, and then we're going 1, 2 on a faster time frame back down to that range. All right, guys? Now, what does a breakout look like? We all know, stay away from the middle, right? Stay out of that middle. 1, 2, back down. 1, 2, back up. Okay, what does a breakout look like? Breakout, either direction. 1, 2, 3. Strong move up, pull back to the moving average. Strong move up, pull back to the moving average. Blasts off the moving average. So important you wait for that blast, because that blast is the handing of the baton from the sellers to the buyers. Once I have that blast higher, and I hope tomorrow we get that breakout at some point, mark up that high, mark up that channel, And I'm telling you right now, with Draghi speaking tomorrow, we have a very good chance of getting that breakout. The one thing that I always tell my clients is that when a market breaks out, you've got to be on the ball. You've got to be paying attention. I don't mean chasing after it, but I mean as it breaks out here, you go, okay, grab that high, find that low, and get ready to buy it. I'm not talking about being impulsive. I'm just saying when a market breaks out, everybody gets involved. Traders who are in the market get forced out. Traders who are out of the market usually get prompted in. So it becomes a very busy environment. Okay, but again, tomorrow, give it some time around Draghi. Draghi, of course, speaking. 7:45 is the announcement. He'll probably be speaking tomorrow until about 9 o'clock, 9:30. Okay, so be aware of that. And we'll, of course, have our finger on the pulse tomorrow morning in our trade room. Last but certainly not least is the euro. The euro's bearish. It's into a trading range. We talked about this last night, right? Last night in the newsletter, we talked about how, right, 1, 2, 3, right? 1, 2, 3 legs down. Again, it's not a guarantee, but usually when a market goes 3 legs down, it's usually going to go sideways the following day, right? Usually it's a little bit too low to sell, and the market's just simply too bearish to buy. So what I like to do is anytime I see a range that gives me a couple lower lows like this, I line up those lows, and I use that to find a high. Now, I got to be honest, this is not the prettiest thing in the world here, but it really looked, it didn't look horrible, right? The midline looks pretty good in the middle there. I've definitely seen better. But really what that does is it allows me now to use this bear bias in this trading range, right? You guys are experts in this now, to sell up around the high of that range, right? So let's put everything together right now. We get a bear bias, right? That bear bias, though, what is that? That's a big, strong move, right? What do we expect to see during strong moves? A second leg. What's a good way to enter short if we've got a lot of bullish momentum? A 1, a 2, and down. Bingo. See? Now you can see what we do every morning on Trade Room. Every morning we build the plan together. And what? We've been here together 45 minutes now, and you're starting to see those light bulbs start to shine pretty bright now, hopefully. All right? Only the beginning, work with me every evening on our newsletter. So strong move up, probably going to see that, right? Nice push, that nice 1-2 punch, and then back down again. Now, what if I'm wrong, right? What if it just collapses back down again? Remember, you want to stay out of the middle. You don't want to trade the middle here. A lot of times what happens is you get these little pullbacks in here and they kick back, right? Because nobody wants to trade the middle, right? The middle's not a very friendly place to be. So now we go lower here, right? We go lower. What's the plan here, right? A couple different options here, right? Strong move down, right? Strong move down. Let's say it's a very strong move. Strong move down, going with momentum. What are the two things to look for? First one is the 1, is the 2, and the back up, right? Rising support trend line, 1, 2, go. Back into that range. The other scenario would be strong move down. We get that second leg. Momentum is still very bearish. 1, 2, back up in. All right, guys? Target, of course, opposite side of that range. Leave a runner for that channel high. All right, guys? Stay away from that middle. Buy those lows, sell those highs, right? And batten down the hatches for my boy Draghi tomorrow morning at 7:45 to about 9:15, 9:30. Guys, hope you learned a ton in tonight's video newsletter. I'm going to come back tomorrow morning, 8 o'clock Eastern time, and we're going to execute that trade together in our trade room. I'd love to have you there with me. It's all inclusive in our advanced classes here at School of Trade. Our advanced course includes our beginner, intermediate, and advanced classroom sessions. They include all the indicators that you need, all the templates, the trade room, all the ongoing support. You can learn more right on the homepage here of our website. I've also got a great free pass for you. If you want to come out and experience a trade room with us as a guest, grab that free trial on the homepage of the website. It also includes your free trading class as well. How about questions? Any questions? Call that toll-free phone number. Use that live support. And by all means, right, come back and see me again here next time in our next edition of our nightly newsletter. Now get out of here. Get some rest. I gotta go bail out some water in my pool in the backyard right now because it's been raining here for 24 hours straight, and I swear there's a whole colony of ducks harvesting out my pool right now. I go bail them out of that pool. I'm gonna wrap up for now. Get some rest, guys. I'll see you guys tomorrow bright and early. If not, same time, same place tomorrow night on our newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.